Hello, I'm Steve Cress, Head of Quantitative Strategy at Seeking Alpha, and I'm joined today by Emma Johnston, our quantitative strategist, and welcome to the Quant Advantage. Today's presentation is going to tell you a little bit about how Seeking Alpha's quant system works, and we're really looking forward to giving you that advantage that you might have over your current processes. But without further ado, I have to get into a little bit of housekeeping. A quick disclaimer. We are not advising you personally concerning the nature, potential, value, or suitability of any particular security. You alone are solely responsible for determining whether any investment, security, or strategy, or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. This presentation is for information purposes only. Content is presented as of the date published or indicated and may be superseded by subsequent events. It represents my opinions, which may not reflect the views of Seeking Alpha as a whole. Past performance is no guarantee of future results. Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank. As always, thank you for your patience during that lengthy disclaimer. A little bit of history on myself. I've been in the investment world for over 35 years. The bulk of my career was spent at Morgan Stanley, where I ran a prop trading desk in quantitative strategies for about 13 years. I also founded a hedge fund in quantitative strategies and started a fintech company in quantitative strategies as well that was acquired by Seeking Alpha. And that is what has brought me and the quant system to our platform today. Emma, would you mind telling us a little bit about yourself?
Absolutely. Thanks, Steve. Thrilled to be here today talking about all things quant for Seeking Alpha. I have about 8 years of experience in the industry, primarily working with systematic factor-based strategies. So very similar to what we're going to be talking about here today. Now, I currently work on the content team for the quant team, contributing the Alpha Picks portfolio and a bunch of different analyses that Steve puts out on a regular basis.
Emma, thank you very much. So a little bit about what we will cover today is our Quant Vision and how Quant works for Seeking Alpha, touching base also on the University of Kentucky study, which we're very proud of. That is an independent study that validated our quant system. A little bit about Seeking Alpha's quant dividend grades, and an introduction to Alpha Picks, which is a separate platform that provides you with our top quant ideas twice a month. So without any further coverage of what we'll be touching base on, I will dig right into it for us. Our quant vision is to eliminate emotional investing and uncover top stocks using data-driven tactics. So what that means is we really don't take the word of any management team or any analysts that are on the street or people who are on major media platforms, maybe such as CNBC or Bloomberg, or even the head of quantitative departments in other firms, or strategy or economists. We really rely solely on the data that comes from companies, and we look at the historical data and measure that data for each company versus its competitors. And we also look at forward data, and when we look at forward data, we actually collect consensus estimates from Wall Street analysts. But we're not dependent on any one individual. So it's a very data-driven approach, looking at both history and forward analyst estimates. So how do we achieve our results, and what is quant? Well, quant is really very similar to fundamental analysis. If you were to look at the work from an analyst from Morgan Stanley or Merrill Lynch or Goldman Sachs, we really conduct our research in the same type of manner. We're looking at companies and their key fundamentals. And when we look at key fundamentals, the ones that are core to our quant system are value, profitability, growth, upward analyst EPS revisions, and momentum. That upward analyst EPS revisions is where our model is forward-looking, and we're actually looking into the quantity of analysts that move their estimates up and down. But we also do bake into our growth estimates, whether it's revenue or EBITDA growth or EBIT growth or EPS growth, the consensus forecast. So our system very much is fundamentally based, but what makes a quant is that we take the power of computer processing and we use that ability to assess almost every investable stock every single day. Where most analysts, a typical analyst at Morgan Stanley or Merrill Lynch, they could really assess maybe in their entire universe of stocks that they cover within a sector, 15 or 20 companies, we have the ability to look at thousands of stocks every single day and look at it with a fresh set of eyes because we upload data every single day, millions and millions and millions of data points where we cover cash flow statements, income statements, balance sheets, and ratios for profitability, value, growth. And we take each of those metrics for a company and we compare it to other companies in the sector. And that helps us to filter out the strong companies from the weak companies. And we actually rank every single investable company in our quant universe. So really the difference with quant versus fundamental analysis is we take that fundamental analysis, but through that power of computer processing, we can assess every single company every day, which if it was left to do on a manual basis, that would be virtually impossible for any single individual. So we really take the whole of that investable universe that's out there and we crunch it through our computers. So we have a fairly good track record. As you can see here too, we're looking at a 5-year track record. Our track record actually goes back to 2010, but we want to look at recent history. So you'll see on the far left side, our quant system, looking at the strong buys, is up 284% versus what you would see on the far right side is the S&P 500, up 99% for the same period. And we're using the S&P 500 on an equal weighted basis because our quant strong buys, we're investing on that on an equal weighted basis. And the point of actually showing this track record is not to get you to invest in any ETF. We don't have an ETF or a mutual fund. What we're trying to showcase here is that our GARP strategy really works well. And GARP is growth at a reasonable price. As I mentioned, we also look at momentum and EPS revisions on top of that. But the basic strategy has worked for many, many years. And when we score companies and identify those as strong buy, we put it into this portfolio. So again, this is really just to demonstrate how well that the process works, as opposed to this being a specific investable idea. So how does our quant system work? Well, as I mentioned, it's a very data-driven process. Our directional recommendations, which rank from strong sell, to hold, to buy, to strong buy, work on a scale of 1 to 5. Companies closest to a 5 would be a strong buy, and companies closer to 1 would be a sell. We do this for nearly all U.S. securities, and we run data for almost all U.S. securities through our algorithm, which, as I mentioned before, we really focus on value, growth, profitability, EPS revisions, and momentum. Those are the core characteristics that we use to rank our companies. And our universe stands at about 4,700 stocks. And on any given day, our quant strong buys would be about 350 to 400. And the same would be for our strong sells, which is a really big difference. When you look at Wall Street research, only about 2 to 3% of the stocks that they cover are sells, where we virtually have the same amount of strong sells as we do as strong buys. So it's much more of a data-driven process. We don't rely on the emotion or a biased view of any individual. There's no investment banking. There are no block trades. We simply go on what the data tells us. So we try to make this a very user-friendly experience as well. When we look at the right-hand side here, you can see what our factor grades look like. And you'll see that they're academic letter grades. And our academic letter grades run from F to A+. And we basically score each of these core characteristics: value, growth, profitability. And as I mentioned, it's on a relative basis. So when you're looking at that valuation grade and you see a C- on the right-hand side, you know that the valuation for the stock would be in line with the sector. If you see a growth grade of A+, you know the growth is far stronger than the sector, or a profitability grade of A- would indicate that it's far stronger than the sector. So when you look at a report on our stock page, you'll see that it gives you an instant characterization of where a company stands on these very, very important investment characteristics versus its competitors. And what I'm going to do right now is I'm going to actually take us into the platform so you could see what a stock would look like. So right now I'm on our main dashboard. So if you're a Seeking Alpha Premium client, this would be the main dashboard. And what we can do is if we want to find some quant top stocks, we can actually go down to top stocks. And you'll actually see in top rated stocks, companies that have a strong buy or buy rating from the quant system or are seeking alpha contributors or Wall Street ratings. These are three independent directional recommendations. The quant is separate from the seeking alpha contributors, which is separate from Wall Street. But the common thread that you see with the top rated stocks in the screen is that most of these stocks are strong buys or buys. So I'm going to scroll down and find a company that might be familiar to a lot of individuals. And actually, many of our top stocks right now, we're seeing quite a few foreign names. And reason being is many of the foreign markets are actually doing extremely well, as are stocks in those markets. So I'm going to pick on Carnival here. And we're going to use the US listed security, which is ticker symbol CCL. So you can see over the course of the year, the stock is up 24%. And as we look to the right-hand side, you'll see the Seeking Alpha contributor consensus buy, Wall Street consensus is a buy, and the quant is a strong buy. So when we're looking at the factor grades, we know that this is in the consumer discretionary sector. So as we scroll down a little bit, you can actually see the sector that it's in and its industry as well. And for its sector, it ranks 19 out of 480 stocks. Within its industry, it ranks number 1 out of 34 stocks in the hotels and resort and cruise line sector. If we want to take a deeper dive into growth, it's one click away, and you will find the same academic letter grades for specific line items for revenue growth, for EBITDA growth, for EBIT growth, and for EPS growth. And as we scroll down, you can see it for a number of other factors as well. So again, this is telling you on a revenue growth basis for year over year, that A- shows you it's much stronger than the sector, but we're very transparent. We actually show you what that revenue growth number is. It's 12% versus the sector 2.2%, hence the A grade, again, giving you that instant characterization. If we were to look at EPS growth for year over year, this company had tremendous growth year over year, 377% growth versus the sector, which was actually negative growth year over year, hence the A plus grade. If we were to look at profitability, it'd be very similar. If we took a look at the EBIT margin, it's an A minus. The EBIT margin in absolute terms is 14.89%. The sector is at 8%. So it's at about an 82% premium to the sector, hence that A minus grade. So we really make it very user-friendly, very transparent. We provide news on a very frequent basis. And as I mentioned, we have the Seeking Alpha contributor rating here. This is the consensus, but you can actually look at this analysis on the left-hand side. And these are individual contributors. And you can see somebody submitted an article today. Actually, 2 people did today. Somebody did last Friday. Somebody the Sunday before that. So there's a high frequency of contributors that write articles on the companies. So you really have 3 independent sources. You have the contributors, you have Wall Street, you have quant, but really the extra benefit is you have news that's provided on almost a daily basis for most of our stocks. So that gives you a little bit about the platform. And I'm going to take us back to our presentation and enlarge that. And one thing I will tell you is as we do rank companies, that not all the factors are equal weight. We've back tested these factors for many, many years. Some actually have more of a predictive value than others. So when we're looking at value and growth and all the underlying metrics, just know that not all the metrics are equal weighted. And in fact, when you do look at the overall grades, we actually do have disqualifying factors. So if a stock were to be a strong buy or buy, but all of a sudden the growth momentum or EPS grade was a D plus or worth, it would automatically default down to a hold. So when grades are below a certain threshold, we want to take that buy off and go into more of a neutral territory. For value and profitability, that grade would be D minus. So for the most part, you can have a strong buy or buy as long as those grades are above D minus or D plus. But again, we have a sort of what I refer to as a circuit breaker. When it gets below those levels, they default to a hold. Emma, I think I'm going to hand it over to you at this point.
Excellent. Thanks, Steve. And thanks so much for taking us through the platform. As you can see, there's so much to look at when you get really into the engine of the quant system. And I always encourage people who are curious to poke around for themselves. It's the best way to become familiar with how it's built and what it's actually telling you. But I'm going to pick it up here to talk about a University of Kentucky study that I believe was completed a couple of years ago. It actually predates my time here, and Steve is just being really modest, making me talk about this instead of himself. But what happened is, the University of Kentucky found that Seeking Alpha Quant ratings strongly predict future returns and provide clear buy and sell signals. From what I understand, this was, independently undertaken. Some business and economics professors there were curious about how the quant system might contribute to the quality of research that is provided by SA analysts, crowdsourced research. And they actually found that analysts who incorporate quant ratings into their overall analysis of a given security just provide a better quality of analysis. So that was hugely flattering for the quant team here. This was something, unprompted, kind of found out about, this analysis being done. So it does validate independently the quality of these quant ratings. Could jump to the next slide. And yeah, so here's another portion of the quant universe I wanted to talk about today. Steve's obviously talked about both quant ratings and factor grades, but we also have our quant dividend grades that are born of the same philosophy, that you can find an objective, unbiased approach to the quality of the dividends for an income generating security. And obviously this is hugely important for people who rely on income focused investment strategies, retirees, but other different types of investors who obviously want to incorporate that income generating component into their approach. And so, we have our dividend grades. They are categorized along dividend safety, growth, yield, and consistency. I think the understanding of that is pretty intuitive. Obviously, in terms of dividend safety, if you're an income focused investor, you really want to avoid dividend cuts. You obviously would probably want to have your dividend grow. You want to understand where on a sector specific basis, or a sector relative basis, the dividend yield fits in, how well yielding is the stock, and then consistency. So how likely are you going to see that dividend continue to be paid out and potentially grow? So on the next slide, I'm going to introduce us to I wanted to touch on some of the precision that is incorporated in these dividend grades. So you can see on the left-hand side of the slide, that is the submetrics for a dividend growth grade for just a standard equity stock. On the right-hand side, we have our dividend growth submetrics for a REIT. And I like to show this for a couple of reasons. One, Steve kind of showed you what was underneath the hood in terms of factor grades. This is what's underneath the hood in terms of dividend grades. But I think it also demonstrates how much precision is incorporated into arriving at these grades. So the REITs have REIT-specific metrics that help provide a clearer picture and deliver more accuracy in determining the growth grade, and that applies for safety and yield as well. You would see some difference in the metrics as you're comparing just a regular stock to a REIT. But again, encourage you, if you have access to the premium platform, dive into these dividend growth rates and get a feel for how we're arriving at these grades. I think they're pretty intuitive. Growth rates are looking at a history of dividend growth on a compound annual growth basis, revenue growth, earnings, etc. And you would see that for the dividend safety as well. We take into consideration a number of profitability metrics, etc. So we can really provide an instant characterization of the quality of that dividend.
So it'll take us to our next slide.
Next slide. Thank you. Yes. And these are some, just really some important data points to really substantiate the significance of these grades. This is dividend safety is something you'll hear Steve tout pretty consistently, myself as well. And, really excellent statistic here is that around 99% of dividend cuts are averted by owning stocks with dividend safety grades from A+ to A-. When you expand that from A to B-, you can avoid about 98% of dividend cuts. And that works on the flip side too as well. So 41% of all stocks that have a dividend safety grade of F cut their dividend within the next 12 calendar months. So again, these grades, highly predictive, really helpful in helping you assess the likelihood you're going to keep seeing the income generation that you want to see by investing in these stocks. So just a huge, research tool as well. I believe we have some comments on dividend growth as well on the next slide, Steve. And yeah, so over the last, this is the back-tested history of our dividend growth grades, right? So since January of 2010, Seeking Alpha strong buy stocks with an A+ dividend grade are up 673% compared to the Vanguard Dividend Appreciation Index, which is kind of a standard benchmark for dividend income and growth. And you can just see that the outperformance by targeting strong buys with A+ dividend growth, it's a pretty substantial difference there, over 200% difference over the back tested period. So again, it really speaks to the efficacy of the dividend growth grades. And then hopping finally to Alpha Picks, Steve mentioned this at the top of the presentation. And for those who aren't familiar, I'm just going to give you the 2-minute elevator pitch here. But I again encourage you to head to the platform and read the About page, because it'll give you a much more comprehensive understanding of how this stock recommendation tool has been formulated. But Alpha Picks is for a user who maybe has a lot of high conviction in the quant system, but does not have all the time in the world to do their own research on all of the quant strong buys. And so Alpha Picks is our, basically distilled version of the quant system that sends you 2 stock recommendations per month. They are the best of the best quant strong buys that we believe have the highest potential for capital appreciation. And it employs the same quantitative data-driven methodology. It's really for long-term buy and hold investors. It has minimal turnover. You would be learning about 2 new stocks per month. And then occasionally there is a sell based on the quant system sell criteria. And you would be alerted of that immediately. And so it really works as a nice template for folks who want a concise and really efficacious way to understand some of the best quant strong buys out there. I believe on the next page, I'll speak to a little bit about, some portfolio and performance highlights. So, unfortunately, we can't let you look under the hood right now to see all the picks that are in the portfolio. You'd need to become a subscriber to have a look at that. But these are some highlighted stats for the portfolio. We've got 1 stock in there up over 500%, 7 stocks out of 38 total stocks that are up over 100%. And this little table here, I think it's just a great distillation of that GARP approach that we're trying to achieve in the quant system, and then of course in Alpha Picks as well. And you can see on a forward-looking basis, revenue and earnings are much more favorable relative to the S&P 500, which is our benchmark for performance. And then the reasonable price portion is right below there. When we look at some standard value metrics like price to earnings, we can see that the Alpha Picks portfolio is very decently discounted relative to the S&P 500. So these are just, a little bit of analytics to help you understand the inner workings of the portfolio. And then I believe on the next page, Steve, we've got our performance since inception. So the portfolio went live in July of 2022. And in that very short time, it has returned over 130%, 134.04% to be exact, compared to the S&P 500's 45.88%. So that is our performance since inception. Very proud of that figure. And again, speaks to the efficacy of the strategy for folks who are looking for just a much simpler way to get our quant system delivered to them.
Emma, thank you so much for that. I'm actually going to take us back into the platform pretty quickly, just to show people how we can put the quant in action and they can decide for themselves if it's useful or not. So here was a case where we picked Carnival, which was a strong buy. Just as a quick refresher, we have our quant grades, which go from F to A+, and that gives you an instant characterization of where the company stands on those important investment characteristics. And we also show the ranking. If I go back to the left-hand nav, you have the ability to use stock screeners as well. And we actually have many screeners. You can create your own custom screens, as I do, for just about any theme that's out there. And then we have pre-baked screens that are available. If you're a Seeking Alpha client as well, you could look at the top quant dividend stocks. You could look at high yield dividend stocks, top growth stocks. So I'm actually going to just click on this as an example, and it will show you the company, the growth grade that's there since we picked it up by growth. And then you could add many of the other factor grades as well, which is really quite easily. You just do that one selection, and then we could click over here, and you can see all the factor grades. So it'll add it in. And you can look at all these quant grades for value, profitability, momentum for all the growth stocks. So if you're looking for growth stocks and you want to do some of your own research, the screener is a terrific tool. If you have your own portfolio, and I'm going to show you sort of portfolio tools that I look at. I'm going to expand over here, and here are all my portfolios. So I have one that is AI and robotics. We're going to take a quick summary of that. And it's really great. So what I've done here is I've loaded up 3 ETFs and the holdings in those ETFs, and I then apply the quant grades to it. So I could find out all the AI or robotic stocks that from a quant perspective are very attractive. So really, really a very easy process to do. And it gives you the ability to do your own research. And here I could look actually at the performance for these stocks over various time periods. I could look at the valuation for these stocks as well. So I could see what the PEs are, or the price of sales, or EV to sales for many of the stocks. So just quite a bit that you could do utilizing the quant. Or as I said, if it's really like a little bit, too much, and you want to sort of just stick with the Alpha Picks product that we created, I'll click over here on performance, and we're going to show you how many stocks have done incredibly well, just the recent ones. I can't show you the whole portfolio, or these are actually older names. We had Super Micro in there that actually had a return of 968%. We closed that position. We have another stock, App11, that's up 562%. Modine Manufacturing, which we closed, was up 348%. So if you go to the About page for Alpha Picks, which is a separate platform, it'll tell you how we choose those stocks. Very transparent system with the historical performances. So there are a lot of variations that you could do for the quant. You could either do your own research, or you could use Alpha Picks. You could cherry pick a tremendous amount out there. But for the most part, I'd really encourage you to give it a test if you haven't used it before. And if you are Seeking Alpha premium client, definitely say, use those quant grades, because it will help give you that instant characterization of how those companies compare on a data-driven basis to their sectors. That's it from myself, Steve Cress at Seeking Alpha, and Emma Johnston. Thank you so much for your time today.
Thank you so much, all. Hope to see you soon. Take care.